a little bit about me. I've been at City University for around 10 years. Prior to that, I trained and qualified at Deloitte, so I know a little bit about internal audit. In terms of our attendees, hopefully I can add a bit to your knowledge this morning. I'm also an audit committee member at Goldsmiths, University of London, and also here at the Chartered Institute of Internal Auditors. So I'm quite fortunate to see audit planning from both sides. So as a director and as an audit committee member, I think that has been quite useful for me. I have a few qualifications, CIA, CRMA and the ACFE, which is the fourth qualification. So I was asked to present to you to talk about strategic planning, and some of this has come from the Institute's EQAs that have been taking place to kind of prompt some discussion around how we as auditors put our plans together. Certainly at City, some of the key challenges we have are kind of making sure we understand the wide stakeholder requirements, managing their expectations in terms of what internal audit can deliver, making sure audit committee members appreciate the role and purpose of internal audit, and that really should come through your audit planning and your strategic planning documents. So as standalone pieces of information, audit committee members should be able to understand what they're going to get from you as an audit function. So if that all makes sense and you're all in the right webinar, we'll carry on. Nobody's left yet, which is good. So what we're going to cover briefly, a bit of an introduction really, a bit of a reminder as to kind of why we do strategic planning. And then I'm going to take you through kind of what we do at City, or what I've done at City over the last 10 years. So we'll talk about how I've identified the audit universe, what that is. I will talk to you a bit about City's risk assessment method, and then really kind of my process of putting that plan together, how I've engaged, and really how I've managed and met stakeholder expectations during that strategic planning process.
Steve, can I just interrupt you a second?
Sure.
Will you also talk about some of the challenges that you have faced? Because I think that would be helpful for the listeners.
Yeah, I will do my best. As you mentioned earlier, if there are any questions around at any point in terms of my challenges, I can answer those as well.
Thank
you. Okay. So I guess the first question we need to ask ourselves is kind of why strategic planning? Why don't we just turn up every day and just do whatever we fancy doing and doing audits ad hoc? Sounds lovely. But really, the reason we do it is to ensure that we have better identification of risks that are facing the organisation, to support the organisation in having better ability to control those risks. Clearly, the point of strategic planning is to make sure we are coherent with organisational objectives. We need to be providing assurance over the activities and objectives of our functions and our organisations. It provides a clear basis for the scope of any of our audits going forward. So you don't turn up to do an audit on procurement and someone says, well, why are we bothering with this? Well, actually, it's a core part of our organisation. And I do apologise if I keep referring to institutions. Universities are institutions. I'm a little bit kind of stuck in that mindset, but I appreciate the audience is much wider than universities. We do it to ensure that it helps with undertaking our audits and our report recommendations. So actually, if we've got a clear basis for undertaking a specific audit, when we come to deliver audits and the recommendations attached to those, it gives a good, strong basis for having done that. It gives us a basis of measuring and improving the performance of the function. Some of the traditional methods of performance management are a little bit old-fashioned in terms of numbers of audits delivered and numbers of days, but it gives us a view for certainly one performance measure I look at is the numbers of audits that are requested by the executive team and requested by audit committees. And actually, I would expect to see a fairly continual growth of demand on our expertise as years go by. As I mentioned, the strategic planning process helps the board, the audit committee, and senior management to understand how we as a function will support them, and that word is quite key, supporting them in achieving the organisation's goals and objectives. So if that all makes sense, we'll move on. It's a little bit obvious, but really the first point of any planning process is to understand what your organisation does. So my plan is put together through a thorough understanding of what we do as an institution and the industries that it operates in. We have to demonstrate and understand the key drivers of our university or our institution and its key risks. I think we're right. So the first thing, which I've already mentioned, is kind of managing our stakeholder expectations. So understanding their expectations is a critical step in developing our audit plan. It's important to include the key internal and external stakeholders in your discussions and your development of your audit plans. So from my perspective, this will be our board members, so our council, our governing body, the senior management team, the Vice-Chancellor and his executive team, as well as our external auditors. We do talk to them. They do have an interest in what we're covering. Clearly, there's an expectation that whatever work we do, they will do their own work anyway, but it's good to ensure that we are identifying the same key risk areas in our audit planning process. And of course, our regulators. So within the higher education sector, that's gone through a fairly large period of change, but our regulator is still interested in what we do, so we need to ensure that our audit plans reflect our responsibilities to our regulator going forward. It's also important to set out what we, not only is it important to set out what we do cover, but it's important to set out what we're not going to be covering within the audit plan. For me, this is a good way of kind of highlighting a resource. We're a relatively small team. I'm telling my stakeholders, that is my audit committee, the senior management team, this is what we're going to cover throughout the year. Are you comfortable with that? And if there are gaps, then we need to discuss resource and how we may well manage that. Throughout the planning process, it gives you a good opportunity to kind of reflect upon who your key stakeholders are. So sometimes I see my audit committee as being the key stakeholder, and then sometimes that flows through to the executive team. Sometimes it depends on the membership of the audit committees or the membership of the executive teams, but we have fairly fluid management of expectations as audit functions. I'm hoping that resonates with people out there, hopefully still listening. I think we have a difficult role to play, and the audit strategic planning process should articulate and summarise how we're going to deliver against those expectations. So I'm hoping you've already ticking some of these boxes in terms of why it's important to engage with our stakeholders. It's about ensuring expectations are met, and fundamentally we can deliver our audit activity in the way that was expected. So the strategic planning process should firstly explain the audit approach, why we're doing it. There'll be members of the audit committees and members of management who won't necessarily understand the role and impact of internal audit. So the strategy has to explain why we're here and what we do, and obviously the IAA is a helpful tool in that. The strategy has to align with the corporate strategy. If you're auditing in areas that really are of no interest to your organisation, then you've got to question what you're doing. As we engage with our stakeholders, it's about informing them of any changes to the audit plan. You may well develop a plan in April or whenever your year starts. Actually, if that changes throughout the year, you do need to engage with them on a fairly regular basis to keep that up to date. For me, it's around establishing good communication channels between internal audit and management. It's a form of explaining to them what we do and how we're going to help them. It's a good opportunity to attend executive team board meetings and governing body meetings to explain what we do and how valuable we are to you as an organisation. You probably can't say that too often, really. And the other part of the planning process is really to ensure you remind them of the independence of internal audit. And fundamentally, I will still have the final decision on my strategy. And we've had lots of discussions within the executive team and the audit committee about what the plan is going to cover, what the key risks are. But ultimately, it's my opinion I'm providing to them at the end of the year, so I have the final say on the strategy. Notwithstanding that, I don't think I can recall any fundamental disagreements on the audit planning process due to the way that we engage our key stakeholders. And ultimately, this planning process makes life easier for me. If everybody is clear on our approach and our role, it makes it a whole lot easier for me to deliver that function going forward. So the first thing we need to be able to do really is to link our audit plan to the organisational strategy. As I say, the two things need to be aligned. If you're working in areas or providing assurance over areas that are irrelevant to your organisation, then you are fundamentally a bit irrelevant as well. So at City, the audit plan is supported by an audit risk assessment. We also have key performance indicators within our university. We link our institutional KPIs to audit. we tend to do audits of poorly performing KPIs as well. So it's a blend of our kind of more traditional audit risk assessment and core processes, as well as making sure we combined our activity with fundamentally important parts of the institution which are defined by the KPIs. Is that all making sense?
Yes,
yeah.
Absolutely, I'm with you.
Yeah. Nobody's asleep here, which is good.
Nobody's left also, which is good.
Yeah. We normally do thematic reviews as well, so if the executive team or the governing body have particular concerns on a large issue, so for example, certainly within the higher education sector at the moment, student satisfaction and progression is quite key. They're quite big topics for specific audits, so we'll do thematic reviews, but fundamentally my plan links to a number of different key parts of the organisation. So there's the core business functions, the KPIs, and also thematic problems and issues that City and the wider sector are having. So if all that sounds very exciting, I guess some of the other questions is, well, how often do we need to review this? I'm quite keen on having annual review processes of my audit strategy and ongoing reviews of my strategy. There's very little value in agreeing a plan in April and then following through to the following December and January saying, well, actually, that's what we were going to do. I'll be doing that regardless. If things have changed, then we need to make sure we have reviewed and updated our strategic plan. Okay, so clearly when there are changes to the organisational strategy, you need to make sure your own strategy is reflected. City's had 2 strategic plans since I've been there, so the plan has gone through some fundamental changes. Well, my plan has gone through some fundamental changes during that process. Clearly, if your institution or your organisation is going through a strategic planning process, you're probably going to know about it. So there's enough, there should be enough time to feed that back into your own plan. If your organisation is changing or its appetite to risk changes, then your plan should be reflected and reviewed on a regular basis. The degree to which senior management rely upon you as an activity, this is particularly important if the management team has gone through a lot of change and you've got some new senior staff coming through. You want to spend a bit more time making sure that you're meeting their expectations and managing their risks. Hopefully this doesn't happen too often, but if you've got significant change in your activity in terms of your team, you may need to flex your plan up or flex it down. Again, within the higher education sector, we've had a lot of changes within the sector in terms of the regulator, a lot of government changes. So the plan needs to make sure it continues to accurately reflect the sector outside. And as I say, your plan might need to be responsive to any other internal or external assessments of your activity, particularly as Liz mentioned earlier in terms of the EQAs. If you have an external assessment and they identify gaps in your plan, that would be an opportune time to reflect the plan itself.
Absolutely.
We're doing okay for time, aren't we?
Yes, absolutely fine, you're doing great.
So the first thing is identifying an audit universe. This sounds quite glamorous and exciting. Probably it's the most glamorous, exciting part of the job in terms of an audit universe. But I get asked the question, what is an audit universe? So I'll kind of take you through how I've arrived at defining my audit universe, how we identify business processes, and how we then slot those into our audit universe, and how we establish what is an auditable entity or a process. Fortunately, we do have some guidance from the IA. So Standard 2010 around planning talks about the chief audit executive must establish a risk-based plan. I think that most of us here have been in the IA long enough to understand that risk-based planning is kind of fairly fundamental now. But risk-based planning must determine the priorities of you as an audit function. And that, therefore, must be consistent with your organisation's goals and objectives. If your risk-based planning output doesn't match your organisation's goals and objectives, and you've kind of missed something along the line. But quite simply, the audit universe is a list of all the possible audits that could be performed. So it's not particularly scientific or technical, but it's making sure you've got a full understanding and awareness of everything that happens within your organisation. And at this point, you don't have to determine risk for those. It's just all the activities. This helps you to ensure you've got sufficient resource to cover your audit universe. It can provide a degree of rigour around those areas that you're not auditing as well. And again, going back to the earlier slide, in terms of identifying auditable activities, you need to be quite sensible, I suppose, in terms of how you define those processes. Otherwise, you'll end up with tens of thousands of minute auditable activities, and you'll never manage to audit against those. But my audit universe helps me to give a snapshot of what happens within the city, and therefore where I can probably undertake audit reviews. Disappointed we've got no questions yet, Liz.
I've got some, so don't worry.
Okay. So the benefits, well, I think I've probably mentioned a few of those already, but using a risk-based approach, with your audit universe, you can identify frequencies. You can determine which areas of your institution or your organisation will be audited more often. And clearly that's got to be those that have a higher risk rating, a higher inherent risk. I have to explain quite often that it's possible that some areas in my university will never actually be audited. And that's quite a hard concept to deliver. And so when I was first doing audits at Deloitte, when we had high, medium and lows, we would make sure those low audits would be audited at some point over 3 or 5 years. And going forward, as years go on, you kind of question, well, why would we even bother? If it's low risk, why would I remove my resource to audit against that and miss out on a higher risk area? So my audit universe quite clearly tells my audit committee and my executive team what I'm not doing. If they're not comfortable with that, then I would require a little bit more resource, or we can negotiate the risk ratings, I suppose. But it's a useful tool in determining resourcing, and we have this conversation quite a lot within the sector. So how do we make sure that we've got the right level of resource? But as a head of audit, all I can really do is capture my audit universe, assign risk to it, and tell my audit committee and my executive team what I can cover based upon my level of resource. So, does that make sense?
Yes, yeah. It does. Can I just ask you about frequency? So you talked about a different frequency and you linked it to higher risk rating. So if you had a very high risk rated area or topic, if it was particularly well controlled, would that impact on the frequency?
It's an interesting question, and we have had that debate. So we might have done a few audits over the last couple of years where the rating has been good. Now, all that tells me was, at that moment in time, for that particular year, the control framework was good. It doesn't tell me now that control framework is still working as expected. So actually, the frequency still should be should still be delivered by risk. So just because something was good in the past doesn't necessarily mean it's going to be well controlled going forward.
No, that's a valid point, isn't it?
But it does give us a nice discussion as to whether it's worth.
And perhaps an opportunity. I'll let you have a cough and a drink. And perhaps an opportunity, if it's well controlled and you're having that conversation, and you have a sort of something of a track record of it being well controlled, and resources are tight because other areas, new and emerging risks, it might give you that conversation with your audit committee, your senior management team. Actually, this year we won't look at that area because we have a track record, it's well controlled, but we have a new flashing high risk area that's something that we want to spend some time on.
Absolutely, and that comes to audit risk management. So we have a justification for not doing a particular review in a particular year. And that's a discussion I would have between myself and the Audit and Risk Committee. We have audits that would come through as high risk, that are well managed. I know they're well managed, but I have a lot of engagement with the executive team. But ultimately, if that system fell over, have we got sufficient defence to explain why we haven't done that particular audit? And we have had audits that have moved out because we're comfortable with it. We, as in the Audit Committee and myself. But there will still be some audits that we do every year because they're so significant to the organisation that we couldn't risk me not providing that assurance. And in some instances, me doing the audit helps to ensure focus within that area. So for us particularly, tuition fees. Our income stream is key. It's well managed, but I like to provide that continual assurance that it is well managed. And my role isn't always about identifying where there are problems. It's about providing assurance that we are managing our risks. So,
perhaps some of the old deterrent effect of internal audit a little bit.
I'd like to think that has some positive effect.
Absolutely.
So again, we've kind of mentioned this already, but in terms of how we define a business process, well, the bad news is really there is kind of no one-size-fits-all really. The components that we've used or I've used within our audit plan is looking at business objectives. So in terms of your universities or your organisation's strategic plan, projects can provide quite a useful component to your audit planning process, particularly if they're large-scale change projects. We look at kind of our locations, our business functions. So there was a period of my time at City where we would look at schools as sort of entities in their own right. We look at end-to-end processes. We might look at the student recruitment process or the student experience, which is from the moment they engage with the institution all the way through to their graduation and their alumni process. You can do it that way. We have some quite useful help from our regulator. So the OFS will clearly tell us, or tell the sector, the areas that it's interested in, and therefore that has some influence on how we identify auditable processes within City. Systems applications projects can inform that. Third-party contracts.
Could I just ask you, for those of us that are not familiar, OFS, HESA?
Sorry, the OFS is the Office for Students, which was the it was HESCI, which is the Funding Council for England. Yeah. Anybody who works in HE will know there is no funding from government directly anymore. So the Office for Students is the new regulatory body that came into effect in April this year, with a focus of protecting the students' interests, which is very different from protecting universities. And HESA is the Higher Education Statistics Authority. There is so much data that leaves and arrives at universities. And part of our role is to provide assurance that data is, A, is well managed in the first place, but B, that the returns are delivered and they're complete, accurate and valid. So,
thank you.
Yeah, we get a lot of external help, I suppose, in defining what might be in our audit plan. So, how do we establish those areas? So, I believe that if an area has a clearly defined objective and function, that's kind of good enough for me as an auditable area. So that may well be payroll or procurement, but you can break that down to more specific subparts. So I wouldn't do an audit of a whole function. So for property and facilities, we break that down into repairs and maintenance or capital projects or health and safety. As long as you can determine that function or that process has an objective, you can probably include that in your universe as a process. But fundamentally, you need to understand what your organisation does. Again, it sounds obvious, I'm probably telling everybody here the obvious things, but you need to be able to explain that your plan mirrors what your institution or your organisation does. So I would use the strategic plan, a valuable document obviously, our financial statements, slightly narrow, but will give you an indication of where the big values might be. The management structure, so how your institution or your organisation is structured, may well help you identify those areas that you didn't pick up either in the strategic plan or in the financial statement. There'll be parts of your organisation that are, careful how I say it, I suppose, but less relevant to the financial statements, for example, but still should form part of your audit universe. And going back to what we talked about before, just because it's in your audit universe doesn't mean you have to audit it. It needs to link back to risk. We're lucky that in terms of the sector, we have a good network. We talk amongst ourselves. So I will speak to my peers and think, what have you got? What are you covering this year? Are there any key processes you think that we should include? And then finally, our regulatory returns. As I mentioned, there are a lot of data returns that we have, and they will form some quite core parts of our audit universe. So how do you choose a risk assessment method? Well, as I'm talking to a bunch of risk experts, I'm hoping that everyone has in their own mind how they might do that. So I will talk to you a little bit about Citi's one. I'm not saying this is the one you should all use, but it's just a reflection upon what we do. So I'll give you an introduction to how we do it and how that works in terms of our planning process. So just to refresh ourselves, really, the risk assessment method is designed, or should be designed, to give a clear and precise, well-justified, and we go back to that point again, justified recommendations to the management team and the audit committee about what you're doing and why. So obviously, in an ideal world, I'd be able to give everybody a risk assessment model that they could use, but that doesn't really exist it doesn't really exist. Your risk assessment model has to reflect your organisation's requirements in terms of its key risk areas. Obviously, working at a university is very different to a bank, but some of the components I might talk to you about could be useful. But all risk assessments need to consider likelihood and the impact of risk, as you would expect. It's kind of the bread and butter of internal audit.
And I think you make a really valid point. They need to be relevant to the organisation. So I'm sure you wouldn't necessarily take a large bank's model because it may not be exactly relevant to what you want to do. The principles might be, but...
I've never worked in a large bank, but it may well be this model works brilliantly, but I don't know. I mean, these have kind of evolved over the years that I've been at Citi and then I worked at Deloitte. But fundamentally, the risk assessment needs to reflect impact and likelihood of risk against your organisation in order to define what you're going to provide audit assurance over.
It's look as though we're getting some questions, so that'll be exciting for you.
It will be, yeah, as long as I can answer them. So at Citi, I use a 1 to 12-point scale to assess likelihood and impact. So as we talked about the audit universe already, each element of the audit universe is assessed against each of these 12 factors and given a rating of high, medium and low. So I told you it wasn't particularly scientific, and you couldn't develop this much further if you like. But really, the purpose of the assessment is to provide a method by which I can compare and evaluate levels of risk across the university as set out by the IA standard. So actually, for my purpose, this is perfectly sufficient to enable me to compare and evaluate risk across the university. And it's probably worth noting the high, medium and low is fairly subjective, I suppose. But what we do, we'll go through our risk assessment. We assess all of our audit universe entities. And then when I compare, I say, well, actually, that one I put in as high, really. Compared to this particular process, it's not high, it's probably medium. So we do that kind of a comparison to kind of make sure the audit universe actually reflects risk when we've finished.
I think also that stresses, for me, listening to you this morning, the importance of really understanding your business, because you're right, it is subjective, and if you don't really understand the business, then the subjectivity is less likely to be relevant and accurate, in as much as subjectivity can be, because you don't understand the business you operate in.
Yeah, I mean, I think we said right from the beginning, the strategy should reflect our understanding of the institute, of the organisation. But as we go through the rest of the presentation, we'll talk about how we engage with other parties, because it isn't just down to the head of audit to define this or to arrive at the answer, I suppose. But hopefully we'll get through to that. So in terms of the likelihood factors, these are the ones that I use for likelihood. So this is the likelihood of when you take your process, using these factors, it will give me an indication as to how likely it is to go wrong, I suppose. And the first one will be management concerns. So if I've got the Vice Chancellor or the Finance Director telling me they're worried about an area, I'd be a bit of a fool to ignore that. So that would definitely change my assessment of risk there. We talk about transaction stream. So when you're looking at people or cash, that can make a process more or less risky, I suppose. And this one's probably our least relevant factor, I suppose. But when we look at income or assets, they tend to have a higher risk versus communications or media, for example. and I'm sure this next one will kind of ring true with a lot of people, but in terms of our devolution of responsibility, so at City we've got 5 schools who all believe they run their own organisations. So my view of risk increases the further we are from the central corporate body that maintains and manages it. We also have functions that operate overseas, so they become higher risk from my perspective. So this isn't a way of me getting holidays overseas, but this is a way to understand how much oversight we have of the rest of the organisation. Complexity, we look at the complexity of a process. It's normally the numbers of transactions versus the volume of those transactions. So, for example, our student recruitment process, we have a lot of students across a vast number of programs. That's quite a complex process. Our resources, so where we've got a lot of people involved in a process, it may well become more difficult to manage. We look at size of our income and expenditure, so I guess most people listening here would do the same sort of thing. Excuse me. And clearly, going back to your earlier point in terms of if we had an audit that was well managed, would we leave them from one year to the next? Well, clearly, if this is our largest income stream, probably wouldn't.
Absolutely.
Likewise, if it's our largest piece of expenditure, we probably wouldn't ignore it. Saying that, payroll was an audit that would be relatively high risk on our audit plan, but was well managed. So we said, well, should we just leave that? If I'm not leaving income because it's so important, then why would I ignore expenditure? So our payroll is fairly significant. But this whole process is a discussion and a debate about where risk sits and where I can use my valuable and limited audit resource to provide that assurance. My last one around likelihood is stability. So where you've had a function that's gone through particular change, particularly where senior staff have left, for me that flags up an increased level of risk. To be honest, stability in the HE sector is fairly unstable at the moment. There are a lot of parts of the university that's affected by changes from government policy. But this is all around understanding what could go wrong, what's most likely to go wrong, and therefore where I should spend my time. And the next bit is around kind of impact, determining impact. So if a risk was to materialise, which ones would cause us the most problems? So I look at statutory breaches, so our health and safety, funding breach. Well, technically we don't have any funding anymore, but a regulatory breach has become much higher risk than it was under HEFCE with the new Office for Students. The Office for Students for universities are much more keen to protect students and less keen to protect universities, so therefore breaching their regulations or their terms and conditions is becoming higher risk. So actually going back to one of my earlier slides in terms of when you should go back and review your strategic plan, any change in the regulatory environment would be a key time to do that. I look at how a process impacts other systems as well. So is it a support system or a standalone system? So our support functions such as IT, property would be higher risk. No disrespect to anybody in communications or social media, but if that system fell over, we would continue to deliver our teaching and research without any trouble. Our impact on service, so can we continue to deliver teaching and research without this process? Financial loss clearly is important for us. How much would this cost us to either fix or how much would we lose as a result of this process falling over? And then lastly is around kind of our impact on our public profile. So health and safety is a classic one. If a student died on our premises or on our campus, that is damaging in any way, shape or form. So health and safety would always be high risk from the public profile. So they're the factors that I use. We plug them all in to our audit universe, and I will talk to you a little bit more about that in a bit.
Okay.
So I was trying to think about what the sort of key questions you might have in drafting a risk-based audit plan. So I'll take you through all these questions in turn over the next few slides. So what are the steps I've gone through to develop my plan? How do we rank the entities? Why is the ranking essential? I'm hoping by now that's quite clear.
Yes.
How do we reach the final decision by the Chief Audit Executive? Why I need inputs from the senior management team and the board and the audit committee? What does the plan look like when it's finalised and approved? And what does a typical plan look like? If that's okay, I'll take you through the next few, running just a bit short on time. So the steps involved in the process aren't rocket science. We are developing a risk-based plan. So clearly, I'm going to consult the Strategic Risk Register. That's management's view of risk. Again, I'd be a bit of a fool to ignore that. I then develop my audit universe in a way that I've just described. I have one-to-one meetings with key staff, so the finance director, the deputy vice chancellors, the vice chancellor. So the equivalents would be, the chief executive and the chief operating officers, HR, information services, estates. I'm very lucky, obviously, I work in an in-house team, so I have constant engagement with these individuals. But I get their views of what they're worried about, where they see the risk. And because I've been there for a few years now, they're quite honest with me in terms of the processes that they might have concerns about. This helps me to ensure that I'm auditing in places that is going to have an impact on improving how the organisation is operated. I present my plan to the university executive team, give them an opportunity to comment on risks. Interestingly, I used to do it on a kind of one-to-one basis. And actually, if you bring them all in a room together, you have a very different dynamic of them comparing and commenting on risks in other people's areas.
That's a good tip, isn't it, to bring them together?
It's worked well. Again, it kind of depends on your staffing individuals. We had a few individuals that were quite vocal on their own, but were very different in a group. But as a group, a view of where the risk is, you've kind of got to have them all together. I take on board all their comments. I take on board feedback from the audit committee, and then I essentially provide a draft plan that goes through to audit committee. And this plan, even before it's presented, goes through ongoing review and revision. And it goes through ongoing review and revision throughout the year. So I continue to have these one-to-one meetings. I continue to see my audit committee. The plan isn't established in April, and it doesn't stay exactly as it is. I'd like to think we're a bit agile, but that's probably a whole new webinar.
Indeed.
So I told you it wasn't particularly scientific, but this is a line in my audit universe. So this is a particular process. This is property operations. And using the factors and the impacts, likelihood and impact factors I talked about in the earlier slide, we give an assessment of high, medium, and low. And again, don't get too hung up on how do you define high, medium, and low. It's around comparing and evaluating, contrasting across the processes. You give them a score. Okay, I probably shouldn't give away too many secrets here, but 3, highest is given a score of 3, medium is 2, and low is 1. We end up with a total score for likelihood and a total score for impact. We'd end up with, as you would expect, a total score. And then we split those scores through to high, medium, and low, and that then drives the frequency of our audit process. And you kind of know, well, you should know, if you know your organisation, that when you finish this, you've got a list of all your areas, which one's going to make sense. There may be a few that, well, actually, that doesn't seem quite right. Perhaps I've misunderstood or I've underestimated the level of risk attached to some of these factors. It's about comparing and contrasting to arrive at a plan that reflects risk across the organisation. I think I'll just answer the next slide. But kind of why is the ranking important? So the ranking slide, I'm coughing again. I do apologise for my cough. So the ranking enables discussion to take place, and that's key, really. And that isn't just a discussion between me and myself. That's a discussion between the audit committee, management team, and me. To make sure I'm not spending time providing assurance in areas of irrelevant or low risk and missing the big things. And I think I did allude to this earlier, but the ranking also tells the audit committee and the management team where I'm not auditing. I have limited resource. I will be auditing in these key areas. Do you disagree with this? And where else should I be spending my time? It's a discussion. If you're not having this discussion, then you really should be having this discussion.
I think it's important as well is that discussion, Steve, because otherwise potentially internal audit makes all the decisions.
Yeah.
And the audit committee has a delegated authority from your board, council, whatever you might call it, to fulfil an oversight responsibility. And
Yep.
they therefore need to be part of those conversations. So if they just nod and say yes to anything you say, then there are risks associated with that.
Absolutely. If you haven't already engaged with the audit committee as part of the strategic planning process, and the first time they see the plan is at the audit committee. I mean, so I sit on two audit committees, so I do like the audit team to present a plan to us, but there's no way I'm not going to have a comment or a thought on where risk is.
Yeah, of course.
And actually, you need to ensure that the audit committee is feeling engaged in the plan. Particularly, as I mentioned right at the beginning, that it gives you some support for delivering the audit plan going forward. So if your audit committee has agreed, for example, property operations is high risk, and you're getting pushback from Director of Property to do the audit, you have that support from the audit committee and the executive team. I think it's about making my life easier, really, getting that buy-in. And as a head of audit, it helps you to understand where your skill set is within the team. So when you've done your audit universe, you put it together, you risk assessed it, and actually your team doesn't really tick all the boxes, you've got the opportunity to either look at how you may co-source that. You can't just deliver a plan and expect your whole team to be able to deliver against it. But if you don't do your risk-based plan in your audit universe, you're not really going to know whether that's going to work. So, how's the final decision reached, as you just said, Liz? I consider the balance plan. It is still my plan that I present to the audit committee, but the plan needs to take into account the risk register, management's view of risk, the executive and the audit committee's view of risk, the core systems, and also those processes where risks are increasing. So a good plan should be a good blend of all these things. The core systems, for me, is determined by my audit universe. So again, we may have those discussions where they say, this audit's well controlled, or this process is well controlled, do we need an audit? I will get to the point where if I'm losing too many core systems, I'm going to have difficulty in providing my opinion at the end of the year. So my plan is split between strategic risk, core systems, our business as usual type processes, as well as sort of strategic KPI performance. But really, the ultimate decision is between me and the audit committee. My plan is for them to deliver their opinion in a day. We're really just kind of passing opinions up the line, but it needs to be supported by the audit committee.
I think it's a good collaborative approach as well. So, you're working together to deliver the assurance that the audit committee and senior management team are looking for.
Absolutely. And again, not being negative, you've got to kind of see when things will go wrong, that flow goes from the board down to the audit committee, back down to the audit committee. So at any point down that flow, they haven't had or they've had insufficient input into the assurance mechanism, they're not going to be very happy.
No, absolutely.
And as an audit committee member, I would be keen to be seen to giving my input into the audit plan and making sure that the areas are covered, are appropriate. And I think we spent a bit of time on senior management input already, but clearly the point of engaging them is to get agreement from them that these are the key risk areas. If they've agreed that, then they're going to agree to support you in delivering those audits as well. And the audit committee needs to be fully engaged and fully bought into your plan, because they're giving an opinion based upon your plan. And so if your audit committee, you have to be brave, I think. If your audit committee members aren't challenging you enough, you kind of have to put yourself out there and make sure they understand this process and their role in that.
I think engagement as well from the audit committee is particularly important, because if the findings of the observations of the audit are quite adverse or particularly critical, they have to embrace those because this was a collaborative decision to do that piece of work.
Absolutely, yeah. And again, it goes back to the bit I said at the beginning about this makes my life easier.
Absolutely.
So if we delivered an audit and the opinion is not a good one, the audit committee aren't going to say to me, well, actually, this process wasn't that relevant anyway.
And we don't know why you did it.
Why are you doing it?
Yeah.
So it helps me all the way through. And I've never had, well, I've never, that's probably too strong a phrase, very few occasions where I've delivered an audit and the management team, the audit committee, were brought into understanding why it was a significant problem. We're almost there, people, before you've all nodded off. So how is it finalised? So again, kind of sort of reiterating that collaborative process, really. My plan doesn't just turn up at audit committee. It goes through the university executive team first. I said for approval. Technically, they are approving it, but if they didn't approve it, my problems lie outside of the word approval. They should be bought into the plan. They should agree it, and they're happy to take that plan forward. So they do kind of approve it.
Engagement.
But then, but the plan I submit to the audit committee is on the basis it's been agreed by the executive team and picks up all the key risk areas, and that has been arrived at through discussions and debates and meetings with the executive team and the audit committee. But as I say, the key is that the executive team have bought into the key risks. So when we deliver audits, they understand why we're doing it. Absolutely. It sounds basic, but it's important. It is important. It kind of works. So I think I said there was no typical risk-based plan, but you might want to look for some of these things, I suppose, in a risk-based plan, and it might be slightly slanted towards higher education, so I do apologise. But what does a typical plan look like? Well, fundamentally, there has to have been an assessment of risk. The selection of audits within that plan must be based on the current risk priorities. I'm not really a fan of 5-year plans where you say, in 2022, we're going to do an audit of this, and then when you get to 2022, you do the audit of that because you said you were going to, despite the fact the risk profile has changed. And it's got to be based on current risk, in my view. But the audits have to be linked to the strategic risk register. We've tried to link our audits to performance indicators of the university. Again, part of the plan is linked to our statutory obligations as a university. And that's around me giving support that we're able to manage and deliver against our statutory obligations, as well as our data return. My plan identifies sponsors, and we haven't talked about sponsors very much, but going back to the buy-in of the executive team, not only do they buy into it, they take ownership of particular audits in their areas, and they are responsible for providing the responses to the recommendations, and they're also responsible for presenting their responses to the audit committee when we present the reports. So not only have they bought into the risk, they've bought into the audit process, and they know that they're going to be at the other end of the process delivering responses. And lastly, I suppose, as a head, the plan needs to identify the resources required to deliver that audit plan, and it should link to your risk profile. If you've developed an audit plan and you've used a risk-based process we've talked about, and you've determined the level of resource should be X, and you don't have that level of resource, then this is your tool to debate and argue, if you like, with your audit committee that you need more resource. I think we're almost there.
Good.
So
the questions are beginning to come in.
Okay, so in summary, the entities need to be break them down into kind of clearly defined objectives. The method should give clear, precise, and as you said at the beginning, well-justified recommendations to management and the audit committee about what you're going to audit and why and when. Following discussion with the executive team, I would always argue that the plan is then presented to the audit committee for their formal approval, but the plan is submitted on the basis that you have that buy-in from the executive team. Works well for me. I'm sure everyone else does it in that way as well, but that for me is how I would deliver my plan.
Good business practice.
I'd hope so, yeah.
Okay. So, thank you very much for that, Steve. It was really illuminating and also reassuring for us to think. I'm sure that the listeners, it reflects their knowledge, certainly made me think, yes, ticks in boxes, I'm doing some of the right things, so really helpful to know. So, Let's have a look at some of the questions. We've got one here. If you have a variety of components in your audit universe, how do you get comfort that it's complete and covers all areas?
Well, this is an early question, so I'm hoping some of this, Dan, would have been answered through the rest of the presentation, but obviously through the engagement, through the collaborative nature of how my plan is put together, I'm comfortable my audit universe does cover the university, and I would get input from the executive team. Well, actually, you've forgotten about this particular functional. So, Dan, if that doesn't answer your question, then I'm happy for my email address to be circulated, and we can pick that up.
Thank you very much. So we have another question here that looks at reputational. So it's asking the question, do we look at reputational risk or financial risk of the loss of future earnings when you're looking at the risk rating? So I suppose that's a drop in student numbers in your world.
Absolutely, yeah. I mean, our reputational risk, it really drive everything down to reputation and financial, but some of our risk processes will look at student recruitment. Clearly we need our students, just like any other industry needs its income.
It's customers, I suppose.
Yeah, we hate that word, but yeah, they are customers. But yeah, our processes are designed to protect our current position, as well as Andrea said, protecting our future income and our future reputation. Reputation within the higher education sector is particularly hard. Well, maybe it's the same everywhere, but very difficult to gain it, but it can disappear very rapidly. And actually, some of our key points which you gain reputation don't happen very often. So particularly around research, it's only every 4 years. So some of our risk profile, some of our processes around research will be very high risk because of the point that Andrew's talked about, that doesn't happen very often.
And then now there's one that looks at likelihood. We know that they're saying they no longer look at likelihood when completing the risk assessment. It's viewed as it's our job to look at the impact. So internal audit looks at impact. When management look at their risk assessment, they're in a position to determine likelihood when implementing controls. That's quite splitting it, isn't it?
That is, yeah. I'd be interested to have a more of a conversation with Andrew on that one, because I find that quite hard to determine level of risk without looking at the likelihood of a risk occurring. I appreciate impact is important, but where I've got limited resource, I would need to combine the two to arrive at an overall view of where risk may materialise. It's not just the level of risk, it's whether it's going to happen or not.
I think it's an interesting, it's not something I'm familiar with, and I suppose it will depend a little bit on the sector Andrea is in, but certainly I've never seen that happen. So I think it's an interesting question.
Yeah, I'd be very keen to chat to her at a later date.
Okay.
So yeah, taking into account first, second line, clearly part of our control framework is looking at first and second line. The management concerns question would reflect upon that. My risk assessment looks at a process in its entirety in terms of its outcomes. I think Dan might be reflecting upon kind of an assurance framework, I suppose.
So do you have an assurance map in
We do have an assurance map. So
institute?
It goes back to your other question. So if the first and second, the second line of defence is given constant assurance that things are working well, us as a third line are providing that independent assurance. A strong second line or a strong opinion from the second line may influence you to not worry too much as a third line. I don't know what Dee Smith's first name is, but that's probably a question for the next part of the planning process, I suppose.
We're coming towards the end, so let's have a look at what time frame does your plan run over? Is it 12 months or longer?
It's no longer than 12 months. As I say, I would say my plan would be different. So I set my plan in April, and our audit year starts in August. That plan will not remain the same through the 12 months. So, Carl, I'd probably say it's less than 12 months in some instances. The framework is there for 12 months, and every year I revisit the planning process.
Okay, so we've got now some in our chat box. So Karen is asking about organisations' risk assessment and risk register to prioritise?
Yeah, we do. So once I've developed my audit universe and the plan that falls out of that, that's then linked to the strategic risk register. And those risks that are considered to be high residual risk would be a different part of the audit plan. So, for example, I mentioned about automatic reviews. They're two areas that have high residual risk, and therefore they come into the plan in a different way. But we would look at the movement between inherent and residual risk to understand the control framework. But yeah, absolutely, my plan is linked to the risk assessment of management through the risk registers.
So we're coming out of time, so let's look at the last question for this session. Can you explain a bit more about how you articulate what you aren't covering in the audit plan?
It's a good question, Karen. Yeah, I mean, clearly the audit universe is included in the audit strategy. So at a glance, the audit committee and the management team can see those areas that we're not doing in a particular year. The other part of my plan will show where we have covered those areas previously, and I'll give a rough indication as to where we may well do it in the future. As I say, I'm not keen on +1, +2 plans, but I can indicate where we may pick it up. My caveat and my response to Karen's question is that I have days set aside in the plan for either audit committee request or executive team requests. So if we have missed an area, we can still cover areas that we've missed initially if we've been found short in our plan going forward. But the audit universe is presented all the time in each of the plans. So there's a very clear view of what we're covering, what we're not. And it links to risk, so they can go through the high, medium, low areas and say, well, actually, you're not covering any low areas. We understand why you're not. There's a high area here that you're not covering. Why not? And that might go back to questions we had at the beginning in terms of well controlled, first, second line of defences, reflecting well. It's a conversation, it's a collaborative arrival.
Okay, that's great. I'm now conscious that we have run out of time, so can I say, Steve, a huge thank you to you for sharing your practical experience, because I think practical experience is really important. We can all read the books, but it's nice to hear someone talk about their practical experience to see whether it resonates with what we do, or to offer tips that perhaps we haven't thought about in terms of doing our own plans.